Thanks so much for everyone joining us. We have a really good turnout. I'm just kicking off this session because I'm on the board of directors of the NACD Northern California chapter. We have an excellent chapter that sort of leans in heavily to all things innovation economy, venture capital, private equity, startups, innovation topics. And today we have a great session teed up for you. I'm going to hand over to our sponsors today, Pillsbury, Riaz Karamali, who's going to be the moderator of the session, and his colleague, Megan Jones, who will be a panelist with Hunter and Matthew. And I'll opine a bit in the session since I'm in the industry. Pillsbury, anybody in the digital assets world knows Pillsbury. They're well known as a firm globally, but particularly for all their work in the innovation economy. They've won lots of awards from FT, other reviewers of the global law firms for their expertise and leadership in innovation, and they're a fantastic partner in digital assets in particular. And, most of the companies in this space know them well. So thank you, Riaz and Megan, for joining us. And over to you, Riaz. Thanks for moderating our session today.
Thanks so much, Alison, and thank you everyone for joining and taking this time to be with us. So I think we'd like to make this a very conversational panel, and want to start by having all of us just introduce ourselves and say a few words about how we came to be working in this industry and why you think this industry is important. And I'll just start with myself. So I'm a corporate and technology lawyer based in Silicon Valley for the last 30 years. And it's sort of become a hobby of mine to think about what's coming around the corner and what the next technologies are going to be that people aren't yet aware of. And sort of in that vein, I started to learn about blockchain probably around 2013. I really started to try to figure out what was going on there and whether there've been obviously over the last 10, 12 years a lot of hype cycles up and down, but I'm not a technical person, but in my simplistic kind of way of understanding things, I essentially came to the conclusion that blockchain is the potential for making the internet unhackable. And I'll let others sort of talk about that a little bit more about sort of their own version of that. But that's kind of how I like to think about it. And obviously, there have been obstacles in the U.S., particularly regulatory obstacles, and other countries in some ways have gotten ahead of us in this space. And now that looks like it's going to start to change. And that's what kind of makes it exciting to have this panel today. So that's kind of the perspective that I bring. And I've been advising companies that are both investing in this space and doing business in this space for certainly the last decade. So I'd like to move on then. So to Matthew, could you kind of tell us a bit about kind of your experience in this space and your view of it?
Great, thanks a lot, and it's great to be here with all of you. In fact, it's pretty remarkable to me that there's 150, 200 directors of public and private companies joining, and I think that is testament to how the topic we'll talk about today is now something no director can ignore. I spend all of my time in blockchain. I've done that for the last over 10 years as an investor. And with Alison, we have our own firm. We're an investor in more than 1,500 blockchain companies and projects, including half of the blockchain unicorns, 110 that we're invested in. And they have names that you may know, like Coinbase, and they may have names that you will very soon know, like Bitwise. And we're extremely excited to be a part of this. But I began my career as a senior partner at some of the world's largest consulting firms, McKinsey. Then I ran the financial services group globally with Alison for Carney. And then I ran the global digital practice for Booz. And so my clients were Google and eBay and Cisco and Microsoft and Bank of America and Visa. And some of you may actually be directors of those companies. And if so, it's great to be catching up with you again. Thank you. And back to you, Riaz.
Thanks, Matthew. Hunter, could you tell us a little bit about your experience?
Sure, absolutely. It's a real pleasure to be with all of you on the panel, and a pleasure to be with all of the directors who are in the audience. I think Matthew put it perfectly. My name is Hunter Horsley. I'm the CEO of Bitwise Asset Management. We're one of the largest crypto asset managers in the world today. We manage about $12 billion of client assets. We do that for banks, financial institutions, corporates, wealth management firms, family offices, and other investment professionals. And we're about 100 people with offices in San Francisco, New York, and London. And we've been around for over 7 years, stewarding client capital and client relationships in the space, which can sometimes be very time consuming to navigate. And so we act as a partner to investors who are trying to research it and develop theses and participate in various ways. So that's a bit about me and a bit about Bitwise.
Thanks, Hunter. And Megan, how about yourself?
Thanks, Riaz. So I obviously work with Riaz very closely and often. And I consider myself first and foremost a tax lawyer, although I do a little bit more than tax. I do a little corporate and some other things. And I started my career as a technology investment banker in Silicon Valley. I also grew up in Silicon Valley with a dad who's a lifelong tech person. He's a tech expert. He's actually a semiconductor guy. So I am not a semiconductor person. But growing up in Silicon Valley, I think that what's super exciting about it is you see all the new technologies and you see them early on. You see the companies as they're being built. You get to talk to the people who are building those companies, especially when you're advising and working with those companies very closely. And you hear these really great ideas. And when I started hearing about cryptocurrency, and I'm a tax lawyer, so we now call it digital assets for tax purposes, but originally I started hearing about cryptocurrency. And a lot of the people that I respected in Silicon Valley were just gung-ho and 100% behind it. And it's a typical life cycle of a Silicon Valley, massive change where there's some issues at the beginning and, there's some lack of enthusiasm by kind of more mainstream investors. But as you see these technologies evolve, the really sophisticated and beautiful business models continue to improve. And so you get some really robust companies that basically can change the world. And so that's how I got involved in cryptocurrency and a lot of other kind of newer and emerging technologies. I was just fortunate to be born and to mostly be raised in an area where I just grew up seeing that type of progression in society.
Great, thanks, Megan. So let me start by just posing a few questions to individuals of panelists, and we'll see where that takes us. So Matthew, compared to other technological advances that we've seen and that have been adopted over time, where would you say digital assets are, and what are you expecting to see, in the next year, keeping in mind how fast things are moving in this space?
Thanks, Riaz. So I think just to sort of ground today's session, let me just go back 30 years and just say, I know everyone who's here lived through an enormous global transformation. Your lives, your businesses, the companies that you sit on were dramatically transformed by the digitalization of communications and content. And we take it for granted today. Here we are doing live video streaming with people from all around America, and some of you may be abroad, in fact. We couldn't do that 30 years ago. We were in a paper-based, people-intensive world. We digitalized communications and content. You know what that did to your industries. And by the way, all the world's most valuable companies are born internet companies. It was the biggest driver of alpha for public equities in the last 30 years. That is the prologue, because we haven't got round yet to digitalizing value and digitalizing commerce, payments, finance. And every industry is involved in all of those activities. You don't have to be a financial services company to have working capital and payments and receipts and drop boxes and all the other things that were a part of being a well-run business. And all of those things are now being digitalized. We have an innovation that is enabling that. We call it blockchain, but don't think of it as one thing. It's an entire technology stack, just like the internet was. It is enabling the digitalization of every asset in the world, and we'll probably talk more about that. It's also opening up new to the world's financial instruments and assets. I know Hunter will talk about that. And for most of your companies, it is both an opportunity and a threat. And I hope that we'll get to talking about that. I myself have been on about 15 boards, and I know that there are many ways in which a director's work is going to be much more challenging in the next 3 or 4 years. But the good news is you have the opportunity to do remarkable things for the companies that you sit on, but only if you get started now, because most of the world's large companies are running very fast to figure out how to use this horizontal technology. So Riaz, I hope that's a bit of an opening just to ground the conversation, and back to you.
Great. Yes. Thanks, Matthew. And yeah, you mentioned about how there are many companies that are running very fast already, and many of course are not. So of the ones that are, I think some of them are working with Hunter. And Hunter, could you speak to kind of how you're helping companies that maybe aren't necessarily blockchain companies, but they're looking at blockchain for some of their treasury management. So that would be really helpful.
Sure. Yeah, I think the setup, Matthew, that you provided was fantastic there, and I think that there are a few dimensions of the conversation around blockchain technology. Excuse me. There's a treasury management and the sort of financial asset vector. There's a payments story and the fact that it's a new financial rail for digitizing value and transferring value. And then there are also topics around developing new products and services and addressing new markets. And hopefully we'll talk about those three. I'll start by talking about it as a financial asset that companies and boards and trustees are considering, but don't want to, by discussing that first, to imply that is the only dimension to consider here. Having said that, I can get into that topic a bit, and Riaz, if I'm boring people to tears, you just virtually throw something at me. At a high level, what I want to say first, there are many companies doing things, and I'll share some details about that so everyone feels they can walk away with some data points. But at a high level, maybe the most important thing I want to get across to the audience in an attempt to be helpful to all of you today is that 2025 is different. 2025 is a watershed year for this space, and you're going to see a lot more activity from peers, from financial institutions, from regulators, from corporates, from pension boards than you're used to seeing in the past. The space can be sort of, because it's been around for so long and it's been in headlines, I think one can feel very familiar with it naturally, and therefore would anticipate that 2025 might be like prior years, a little bit different here or there. But in practice, 2025 is the beginning of a new chapter, and with it are going to come a lot of changes and a lot more mainstream engagement. Some of the things underpinning that, of course, are, I think, fairly obvious to the public. The SEC is now constructive on digital assets, the CFTC, Congress itself. I was just with Senator Loomis and Haggerty and Moreno, who are very determined to get bills through Congress to foster innovation in the United States around digital assets, and then the White House itself, who appointed a crypto czar, David Sachs, that have and published a number of executive orders. So there are many things going on in the world, but as it pertains to digital assets, 2025 is the year that it is an addressable opportunity for regulated institutions, for public companies, and we're only a few months into the year, of course, but there's a lot that you're going to see as a result of that. And I think Matthew said it well. Now is a really good time to come up to speed, to start to develop a view, to start to think about the agenda for it this year, so that one is not caught off guard in Q3 when you see a few relevant companies in your constellation having already thought about it. That's a lot of setup. Let me just give you a rundown on what companies are doing from a financial asset perspective. Over the last 5 years, the US dollar has inflated and lost purchasing power north of 20%. One of the reasons that people buy Bitcoin and other digital assets is because they say, over a long period of time, I want the value that we create and accumulate to be stored over time. And so people buy Bitcoin. Corporates are no different. They don't want to see their assets, their balance sheet depreciate because of inflation and monetary policy and a variety of other things outside of their control. Today in the US, corporations have $4 trillion of cash and cash equivalents and close to $1 trillion of treasuries that they're using to store their earnings and their assets. What we have started to see, just to share a few additional numbers, today there are over 70 public companies that have now swapped some of that cash for Bitcoin on the balance sheet. And the view that they're taking is that while Bitcoin is more volatile, the benefit they receive in exchange for that is that it gains purchasing power over time instead of eroding purchasing power, as has been witnessed by the inflation of the dollar over the last 5 years. And so, many of them are choosing an increment or an amount of the balance sheet to position in that way. Today, public companies own over 590,000 Bitcoin, which in US dollar terms would be about $50 billion of Bitcoin. And this includes companies across a variety of different sectors. And some of them may be familiar to people in the audience and other directors. There's Tesla, obviously in the industries they're known for. Block, which is sort of the parent company of Square, which people may be familiar with, a prominent fintech company worth tens of billions of dollars. Coinbase, which is in this industry. Semler Scientific, which is in life sciences. So there are companies across different industries, some of them directly involved with the space, others not, who are choosing to implement this as a part of how they're stewarding their treasury. I can also share there's a highly regarded technology company in the Valley that has 10% of their balance sheet in Bitcoin. It's not a public company, so that's not to be publicly disclosed. Block, to provide another data point, has about 5% of current assets in Bitcoin as a public and very regulated company. And then the last thing I would note here is that there are great instruments for doing this today. I think a challenge that many are familiar with in the past is you hear things about USB drives and offshore exchanges and so on and so forth, and it doesn't really seem of the professional grade that is necessary for a public company, a pension, a regulated organization. That has developed. Today, some firms use the regulated ETFs. There's the Bitwise Bitcoin ETF, which is one of the largest in the US, and that has a stack of safeguards in addition to being a regulated product. And others buy it directly through regulated custodians that are supervised with trust charters by financial regulators, state financial regulators. So there's a variety of implementation possibilities, but maybe the important thing to note is that it's not the sort of backwater cottage counterparty set of old. Today, there are regulated solutions for implementing and interrogating this potential strategy. So I said a lot there, but I think the most important thing I wanted to communicate is that 2025 is different than prior years, and it is a good time to update one's mental model, as I expect people to see more and more institutions taking action here. And this is only one of the actions that's available to people, but one that we're seeing happening at a growing rate is storing some of the value in balance sheets and other pools of capital in digital assets. So I hope that that's helpful.
Yeah, thank you, Hunter. That's really helpful, and I also appreciate that you discussed the fact that there are sort of these three different vectors, where the treasury management is one, another is enabling payments, and the other is actually figuring out how it might be integrated into operations in a more efficient way. Alison, so you've served on the boards and finance committees of many many companies and many non-blockchain related public companies. What would you view as the best practices for directors and executive teams of those companies today with regard to the digital asset space?
Yeah, thank you, Riaz. Yeah, so I sort of do bridge the world of sort of legacy companies. I've been an executive. I also served on the board of many banks, RBS, Silicon Valley Bank, City National Bank, many others, and the biggest payments companies in the world, Fiserv. I was on the board there. I've been on the board of so many legacy payments companies, investment management, Janus Henderson Group. I was on the board there. And I also work in my day job is investing in blockchain companies, but I also, worked with lots of innovation economy companies, scaling and trying to go through the public company process. And I think my advice for directors on both sides, but particularly, existing public companies or companies not in the innovation economy is, as a board director, you have to really lean into this. Disruption. I don't think I don't think people realize what's coming at us in the next 10 years. I mean, we had the internet, we all saw how that created massive value opportunities. This next phase is going to be exponential to that, because we have compounding technologies that all work together to help us really reinvent everything that we do. Every industry now can be significantly reinvented. We're talking about blockchain today. We all know about AI. We've got increased compute power. We've got 5G. We've got connected devices. Similarly in life sciences, and it's going to scale enormously from here. And I think every board director, I always say, future view. Every board of directors should work with its company on what is our future view, like 10 years from now, 7 years from now, looking at all the technologies that are in place. What are some scenarios for our industry and how our industry serves clients? And you can have a range, right? You can say, what if things move really fast? What is possible out there as an extreme? And then you can say, what if things move more slowly? What is likely to happen? And when you have a future view, then you're grounded in, then I think most boards and companies become grounded in reality and realize the importance of leaning into innovation, using new tools, technologies, being paranoid about who's coming after them, and sort of changing more rapidly and building innovation muscle more rapidly than their competitors. And there are plenty of legacy companies that manage the digital transformation sort of 1.0, as Matthew says, with communication and content, and are still here, alive and well and going strong. Walmart, for example. And there are others who just haven't, and they're not here anymore. If you look at the New York Stock Exchange and NASDAQ corporate values, we're happy with how those indices have moved up, but it's all driven by either the innovators or the legacy companies who really built innovation muscle. And everyone else, it's a really sad story. So anyway, that's my 2 cents. I have a big chunk of the annual board time spent together with management. 20% of it should be thinking about this topic.
Thanks, Alison. So I have a follow-up question. For a company that hasn't yet integrated blockchain into payments or operations, is it, typically we talk about a build versus buy decision. If they do want to get into a new area, is it too late to build because of all of the work that other startups have done, other companies have done in the space? Does it make more sense to look to either license service providers out there or acquire companies, as opposed to trying to build on your own, or is that still a viable strategy?
You ask, is that question for me, Riaz?
Yeah.
I think, if you look at history, it's proven that, don't try and build these things yourself from scratch, because there are so many people ahead of you with the best talent. So it's all about collaboration, partnerships, certainly acquisitions. A lot of legacy companies are screening the world to find, incredible AI tools or other new technology businesses to augment their own as part of their vision for improving their businesses. So that, I think it'll be externally facing, look outside, understand what's out there, partner, collaborate, and bring the best and the brightest people who have a view and are doing things into the boardroom and into the C-suite.
Go ahead, Matthew. Matthew, you're on mute.
I'd like to sort of build on that, but I'd also like to say that averages lie. And, that was a strategy question, but the directors on this call represent very many businesses in very many industries, and in some places, one good strategy might be a very bad strategy. And I'll be more specific. So Hunter named 3 major use areas. So far, we only talked about one. But if you were to ask me a question like, is it appropriate to try and be a digital custodian? And is it too late to begin? I would give you a different answer depending upon who you are. So if you're one of the world's largest banks, you better figure out very fast how to be a digital custodian, or you're going to lose a very significant portion of your business. On the other hand, if you were Gap, where I used to be the head of strategy, I'd say, why on earth are you becoming a digital custodian? It's not your core business, and I'm not sure you need to be that. And then you ask the make-buy decision. Well, there are great digital custodians that the companies on this call can partner with. And maybe that's the right answer if it's not your core business. And in fact, even in banking, as Alison recalls, you know, we have 3,500 banks in America. Most of them don't build any technology. They source it from Fiserv and FIS and others. So the right answer to all those banks is don't try and build it. Try and encourage Fiserv to embrace it and deliver it to you. Whereas if you're Bank of America, JP Morgan, I saw Seychelles, who we used to work with, is on this call. She used to be Wells Fargo. Well, Wells Fargo should be building in-house. I saw Rebecca Massiera Kaufman's on this call. She used to be Citibank. She knows Citibank has to build this technology. So strategies are not only industry specific, they're enterprise specific. But what's for sure, which is Alison's point, you can't be a director of a public company in America if you do not have a strategy for all 3 things: digital assets, transactions and payments, and using the technology to enable new products and services in your business.
Thanks, Matthew. And following up on those 3 things, and let's talk about the third one. We just got a question that I'd like to address from the chat. Can you please discuss some corporate blockchain applications aside from payments?
So why would you skip payments when every company on this line, their lifeblood is to sell things, source things, pay for things, receive money for things? You know, I used to be, as I said, the head of strategy for Gap. Gap spent every year designing, sourcing, manufacturing, shipping, distributing, selling, and servicing apparel. And it was a hugely complex industry and business, and we had thin margins. The margins were like, in the good times, maybe 8% return on sales. It's probably gone down by now. And yet Visa would show up at the 11th hour and take 2%, 25% of all the money Gap made by just showing up and facilitating a transaction. And we, you know, had class action suits around that issue, but the legacy payment system is slow, costly for every company who's on this list. I was with Paolo, the CEO of Tether. We're investors in Tether yesterday. That is the world's largest stablecoin. He has 400 million customers around the world. He does a quickly approaching $10 trillion of annual transactions. He has issued $145 billion of US dollar-backed stable coins. And yet I'm willing to guess that not one of the companies represented by a director on this call has enabled Tether in their businesses. And yet Tether would allow you to do real-time, essentially cost-free money movement within your business and between you and your suppliers and customers. And it's just an example. So you want me to jump over payments? I don't think we should jump over payments, but if you want me to, I'm happy to go to.
Okay, well, I mean, you have hit payments in a way now.
I don't want to hog the stage either. So maybe Alison or Hunter wants to talk about corporate applications of distributed ledger tech.
I think I can add a couple things too. I mean, there's the blockchain and then there's things like tokens and tokenization. And so again, kind of to Matthew's point, what you do in this space is very specific to your company and your industry. And Hunter was talking about kind of what you could put on your balance sheet or kind of your treasury holdings. And that's kind of one area, but you can also use tokens for marketing, right? That was kind of one of the early adoptions with people using NFTs or other types of tokens to incentivize their customer base. And you could also authenticate with blockchain technology. And that's kind of one area that people like banks and financial institutions have gotten involved in. You can also do things like fundraising with it. We see some of that. It has gone through better and worse periods where people were fundraising through the issuance of tokens. And then also fractionalizing or tokenizing different assets. That's another area where we see a lot of potential growth.
Go ahead, Alison. You're on mute.
I was just going to add, I mean, we could take a lot of time going through all the use cases, right? Because one of the breakthroughs of blockchain technology is smart contracts. And so supply chain implications, you know, there's a long list of use cases out there that are being worked on, many in their sort of early stages of being, you know, truly scalable, but a lot of experimentation. But I think in the assets world, right, most of the world's assets are paper-based. When the deed to your house, you know, if you own a share in an early stage technology company, if you own a small business, you know, if you own a watch, it's got value. It's sort of, if you own a painting. So most of the world's assets are sort of paper-based and also very hard to fractionalize, right? But there are very, very high return asset classes that nobody has any access to, right? You have when you go to your wealth advisor, you get offered sort of fixed income and equities, and then a very few of them do, you know, alternative assets. But when all of the world's assets can be tokenized, they can be fractionalized, and they can be seen, there's transparency, and you create massive sort of liquidity pools and markets. And I think that's, you know, that's a hugely transformative thing that is now sort of heading our way in the next 10 years.
Yeah. Can I just build on that, Riaz?
Sure.
Yeah. So just for the audience, I think it's important to understand why blockchain was created in the first place. And just to do this very quickly, we already talked about how the internet technology stack enabled the digitalization of communications and content. However, we all know, and we're learning even more every day, that the internet technology stack is not able to do everything it needs to do. It was not designed to be as secure as it needs to be. It doesn't have systems of identity embedded in it. It's actually become highly centralized. And it does have those as fundamental design errors embedded in it. Why does that matter? Because for whatever reason, someone called Satoshi Nakamoto, a man, a woman, a group of people, wanted to move value, peer-to-peer cash, across the internet. And they couldn't do it because the internet was not secure enough, didn't have identity, could be gained in various ways, and they needed a complementary technology which, when added to the internet stack, created a complete solution that would enable secure real-time movement of value over the internet. That was distributed ledger technology. So just to be clear, Satoshi invented distributed ledger technology to complement the internet in order to allow Bitcoin to work. And Bitcoin does work. You may not like it, but it does work. And so now hold that thought for a moment and ask yourself the question, in the companies upon which boards you sit, what are the major fundamental unresolved issues in your business that drive cost or inefficiency or make it hard for you to do your business? So if any of you are on bank boards, you know about 40% of the cost of your bank is in KYC, AML, credit, risk, and decision-making, because we don't have digital identity, and you make errors, and you give the wrong people money, you move money you shouldn't have moved, you make investments, borrowing, lending decisions. If we had digital identity, some of that would go away. Well, lo and behold, blockchain is the best data solution we have for digital identity. It's an example. Or I gave you the example before of apparel. If you're on a luxury good board, probably one of your biggest single issues today is provenance. Because if you're Hermes or Louis Vuitton or Rolex, the majority of products sold in the world under your brand is fake. So you need provenance as well as identity. And blockchain, distributed ledger technology is the best solution we have right now for immutable, public, transparent provenance and identity. Or, and I'll give you one more example, then I'll stop. If you're in the healthcare industry, we all know it's going to take 2 and 3 decades to solve the issues you've got. But you know, when you look closely, that most of the major unresolved issues in the healthcare system are also because we do not have easy flowing data around anything. You know, which drugs create the best outcomes with which people should receive which treatments, when and where, which doctors create good outcomes, which doctors create bad outcomes. All of that is a data-driven identity and provenance-related problem. And I could keep on going. I'll stop right there. But I said all of that because I could have done the same for every one of your industries. And I'm not going to argue that it's going to happen fast. But your board directors, and as Alison said, you need your 10-year view, your 5-year view, your 3-year view, and your 1-year view. And I'm absolutely confident that this issue is going to impact you within the next 10 years. And for some of you, it's already impacting you.
Yeah. No, very, very good, Matthew. And you know, I want to be able to address people's questions. And there's some really good questions that are coming up. And there were a couple of questions about the use of blockchain technology in supply chain tracking. And certainly there are companies doing that. I mean, that's something that I've been hearing about for years, and probably some of the companies that you've invested in, Matthew. But so why, I guess my question is, why is it taking so long? Because you probably have invested in companies in that space many years ago, and I don't know, you know, how much traction they've had. Maybe they've had more than I know, but would love to get your thought on that.
Okay, I'll do a really quick answer, and maybe Alison or Hunter or Megan can build on it. But technology takes time, and you know, I worked on the internet in McKinsey in the 80s. I worked at Sears as we figured out what to do with Prodigy in 89, worked at Amazon and AOL and others in the 90s. The years went by and people still told us in 99 that it was all a fraud and all a scam. I worked with Google when literally 50% of the clicks on Google were porn related and a hefty dose was dark web related. So technology takes time to get deployed, especially in complex industries where you have to move an entire ecosystem. And in the case of blockchain, it's all happening so very fast. So blockchain was only created 15 years ago. We already have trillions and trillions of dollars of transaction activity on top of it. It's actually happening really fast. However, for most industries, and it will take a while, and the differentiator will be some companies will move fast and most will be slow. I'll give you an example just to show that it's not in supply chain and logistics. A friend of mine from high school became the COO of De Beers. De Beers has essentially a dominant position in diamonds globally. They have deployed blockchain to enable the provenance of their packets of diamonds as they move around the world. Why have they done that? Because lab-grown diamonds now have got to a point where they're almost indistinguishable apart from the nitrogen within the diamond. So for most people in the world, you can't tell the difference between a lab-grown diamond and a real diamond. and De Beers really needs you to know the difference. It's an example. I would go back to my earlier point, which is for most of the industries here, it's going to be a long time before this destroys your business, but it's only going to be a short time before some of you will get a head start and move ahead of most of the competitors in your industry.
And I'd like to add something. You know, we see a lot of clients who are adapting in this area or adopting the technology or building business models in this space. But there has been a shift in when Hunter was talking about 2025 and why it's different now. Part of it is that technology does take time to get adopted, but also we've had a shift in Washington, D.C. with the Trump administration being a lot more crypto favorable than the Biden administration. And that's kind of filtered down to the SEC and certain other agencies. And so since Trump came into office, and I don't make political comments, I'm a tax lawyer at heart, and I talk about just the kind of implications of what's happening. He issued an executive order a few days after he was sworn in. And in that, he basically said that he was going to shift the policy to support the responsible growth and use of digital assets, blockchain technology, and related technologies across all sectors of the economy. In that executive order, he also repealed some of the Biden administration more restrictive executive orders that some would argue were not really helping the industry grow, but rather restricting it. He also got rid of SAB 121, which was a rule that basically said those who were holding crypto assets, financial institutions that were holding crypto assets on behalf of their customers, we're going to have to report that as a liability on the banks. And I'm not a bank regulator, but I do know that having too many liabilities on your balance sheet for a bank can be problematic. He's also created a digital task force where he's got David Sachs that's been kind of getting reports from different parts of from different agencies within the government. He held a digital asset summit last week where he was hearing from industry leaders about what they recommend and trying to come up with better policies. And other agencies are following. So the SEC has basically stopped certain litigation against companies like Coinbase and Kraken. They've also stopped some investigations against companies such as OpenSea, Robinhood, and Uniswap. And so before they've been very kind of, hindering, and we could talk for hours about kind of the whole battle that they've been fighting out in the courts, which we were calling regulation by enforcement instead of by regulation. And so there was a lack of clarity as to what the rules were, whether something was a security or not under the SEC. And then they also created their own task force, which is led by Commissioner Hester Pierce. And we've had some bills in the House and Senate, both to regulate cryptocurrencies and also stable coins. And those seem to be going forward. And then what I've been watching really closely is the IRS DeFi broker reporting rules, where now the House has basically repealed that. The Senate has a separate bill where they've also repealed it, but they're slightly different bills. And so they need to kind of mesh together to get one that passes. And then the agency that's near and dear to my heart, the IRS, has slowly been giving guidance to people in the space, but they really consider cryptocurrencies property as opposed to a currency. And so that's created some uncertainty with certain business models and kind of how people are going to be taxed. But
yeah.
Thanks so much, Megan. I was trying to fit you in because I wanted you to have a chance to summarize kind of what's been going on, and there's been so much been going on the regulatory side. Alison, did you have something to say?
Yeah, I was just going to say there's some great questions on the chat, and there's also healthy skepticism, which I think is really important actually. But one of the topics on the chat is sort of, look, there's crypto and all these tokens, and then there's blockchain based technology that has incredible use cases, make our digital economy stronger. And I wondered if, I think, Hunter, you might do a good job at this, because how has Bitwise has worked with most of the big wirehouses, broker dealers, family offices, sophisticated investors, high net worth people on their journey to understand crypto as an investable asset. And how have you experienced sort of the journey of people from thinking this is a scam and used by criminals to we really need to take this seriously?
Sure. Yeah. I think that this space can be incredibly confusing because there's so many different conversations and points of view that happen all at once. Is it a token for a celebrity, or is it a transformational ledger for supply chains? So a few mental models that I'd love to offer the directors to help navigate and think about this space. The first is that you have two things that are intrinsically tied, and you could be interested in either of the two things. And the analogy I'd give you is the automobile. In the late 19th century, there were attempts at developing an automobile. They attempted electric, they attempted steam, and they attempted combustion, which was, of course, the one that people are most skeptical about. And ultimately, to cut a long story short, we wound up with the Model T. And the Model T was very useful. It could transport a lot of people and items a long distance. It could move very fast. You didn't have to feed it like a horse. And so people wanted to use the utility and the benefits of the Model T. But in order to do that, they needed to fuel it with gasoline. And prior to the advent of the automobile, gasoline was a waste byproduct of kerosene refinement. So gasoline was thrown away. Because the automobile was useful, gasoline became valuable. And of course, everyone knows the rest of that story. When we talk about this space, a conversation is often focused on either the automobile or the gasoline, depending on the nature of the conversation. When we're talking about developing services or deploying transfer of data, KYC, supply chain tracking, what we're talking about there is the automobile. We're talking about utilizing a blockchain, which is a software service. In order to utilize the blockchain, you have to fuel it with a scarce commodity, the gasoline of the blockchain. And that's what people are often calling tokens. So depending on if your view is let's develop or utilize a service, or let's invest in such a way that we can take advantage of this trend, you might be focused on either of those two elements. And of course, some companies can consider both. But I just wanted to point out that that's the relationship between the two, and a reason that you have sort of wildly different conversations that sometimes feel like a conversation about a software platform, and another one that feels like a conversation about a technology investment. I think again, both can be relevant. The other mental model that I wanted to offer the group is that I remember reading the story of the early days of the PC, and somebody asked, I believe it was Bill Gates or someone in a similar position, why do I need a mainframe in my home? Or a mini mainframe in my home? And what he conjured up through his immense imagination was that you would need it to store recipes and balance your checkbook. And that's why you needed a personal computer. Now, of course, we're on Zoom on our personal computers. You likely have a calendar on your personal computer and countless other things. But the reality is that with new software platforms, it is impossible and fraught to try to imagine the full surface area of applications. And it also makes a conversation like this somewhat difficult, where there are over 100 incredible directors in different industries with different companies to isolate the specific scenario that would be useful to you. It'd be like saying, how will we use computers, or what will be the impact of mobile on our company? Well, the impact of mobile on transportation will be different than the impact of mobile on communications, and that'll be different, and so on and so forth. Because blockchain is a software industry, in the same way that on your mobile phone, your iPhone, there are over 1 million apps in the App Store, and you maybe have downloaded 80, and you may use 10 a day. So there's over 900,000 that are useless to you. But the mere existence of those 900,000 useless attempts does not mean that the 80 you have on your phone did not end up being transformational. What does this mean to you as a director? I think it means that it's very hard to pin exactly the way that this, for all of us on the panel here, to tell you an example that will perfectly fit what you're looking for. And I'd encourage Alison and Matthew and Megan and Riaz are amazing resources. I'd encourage you to connect with people who have expertise in the space to learn the case studies that might be relevant, but maybe sit down with other directors or management and run 2 thought exercises. One, I would say, consider what external parties, vendors or clients or intermediaries or service providers do we have that we transmit data or materials or assets or money to? And just map out what are all those nodes and what are we transferring back and forth with them, be it data or assets? And is there a role that a blockchain could play there? And that may start to help identify some of the things where you should look for examples. And then there's the customer side of the conversation, where you could say, what is something that we would love if we could do it faster, we could do it more globally, or we could do it cheaper, or we could do it in a more digitally engaging way for younger generations, and see what ideas that produces. And there's a litany of examples, but again, it's just very challenging in the same way that there are 1 million mobile apps for an exceptional and broad group like this to pull out of the hat I mean, I think Matthew, you pulled some fantastic examples out, and Alison as well. But they are out there, and those two thought exercises may help you go looking. I think that payments is ultimately the one scenario that every business encounters, and it's a reason that it's such a relevant example to give, because every business, if you run this thought exercise, will realize that you're receiving payments from customers and you're transferring payments to vendors and counterparties. And indeed, the benefit of settling payments through a blockchain is you can do them 7 days a week, 24 hours a day. You can do $1 billion payment or a $1 payment at sub-penny prices that settle in 10 seconds. And there's just no way that that is not relevant to many businesses. So those are some of the things I guess, mental models that I sort of encourage for starting to try to make this mess of topics feel more navigatable. And again, in some cases, it may be a conversation about the buying up the gasoline or the silicon before the semiconductor revolution, where there's an investment positioning opportunity for the balance sheet. In other cases, it'll be about leveraging the blockchain in corporate operations. But I think going down this thought maze can help, and then connecting with experts like some of those on this call who can provide you with examples to continue that journey.
Yeah,
I'm sorry,
thanks, Hunter.
can I just say,
Megan,
Riaz?
yes, Matthew.
Oh, sorry. I just want to say I really like what Hunter just said, but I don't want the directors to think it's only payments. So just to be clear, there are other themes that every business has. Every business does have issues around identity, not just identity of people and customers and sources, but of products and services, and also information and the way it's used in their business. So identity is a ubiquitous issue across every industry. The second one is actually provenance. Almost every business has provenance questions of one sort or another. We said transactions, including financial transactions, which includes payments, but it isn't just financial transactions that every industry has in common. It's also other types of non-financial transactions where you need to have better approaches than you currently have. I'll give you a couple of others because I don't want to stop there.
We're running out of time, Matthew.
All right. So every company has a balance sheet.
Yeah.
Every company has a pension fund. Most of your pension funds are underfunded. You all have that issue in common as well. Back to you, Riaz.
Thanks, Matthew. Something else I want to address, and I want to get Megan's input for a couple of minutes here, is that there is a question that I thought is a very good question. Given the fact we're observing an executive order policy change versus legislation or actual regulations, and that those can change in future with similar swiftness, is it the panel's expectation that greater use will limit the impact of a shift in future? Well, I mean, that's possible, but I think that we are actually hoping that there will be legislation and rulemaking coming out. Now that we have basically a Congress that's more or less aligned with the presidential administration. So Megan, could you talk a little bit about some of the legislation that you're tracking?
Yeah, there's a bunch of regulation that we're tracking. And so there's a bunch of different areas that have been kind of a focus. And so one in particular has been how you regulate and how you classify digital assets. And so the IRS has actually classified digital assets oftentimes different from how the SEC does. And so that creates some uncertainty in the business models that are out there. Just as far as, will there be kind of more of a Wild West atmosphere? What if there's a new administration? Like, what's going to happen on that front? We are seeing real action in Congress as well. We're seeing the House and the Senate both proposing certain bills that are actually making progress. They've kind of proposed them in the past, but they stalled. They didn't really get anywhere because you had a very different viewpoint from one side of the table versus another. And now there has been a shift as to who has kind of the voting power. And that's where people would say the SEC was kind of regulating by just going after, by enforcing, and so sometimes surprisingly so. And now we're actually hopefully going to get some real regulation. And I'll add one other thing, Riaz, and then I know we're running out of time.
Yeah,
the IRS has been stumbling over giving guidance, but at least we do have some guidance in that space. But the broker reporting rules were going to be a huge hindrance on the industry, and that might be changing as well.
Thanks, Megan. So Alison, Hunter, Matthew, I want to give you each maybe 30 seconds to 45 seconds. What's the one takeaway or question you would suggest that directors take to their next board meeting? Alison?
Yeah. Hey, Riaz. So, I think the reason you have a diverse board is you have people with different views. Great to have people who are you know, challenging, more skeptical. But if you're, you know, you also need people who are really open, interested, and, you know, want to look into these new technologies. And there are plenty of people out there who'll come talk to your board. Pillsbury has a lot of partners who will, you talk at conferences, will talk to boards of directors. The consulting firms do, the banks do, you know, companies like Bitwise will do. So I think it's an important enough, it's Internet 2.0. We're really upgrading our entire digitized world. And this is the big second piece of it that's now about to start. And so I just encourage you to at least spend some time on it with management teams and get people from the outside in.
Thanks, Alison. So Hunter, what's one question that a director should be taking to their next board meeting?
I'll just offer a narrow one, which is what is the analysis we will use to defend why we don't own digital assets in the corporate treasury if shareholders develop the view that we should have made that decision.
Great. Matthew?
Well, I guess I'd leave you with the thought that over the last 20 years, the most valuable board director on most boards was the one that was able to help their companies navigate the internet and its deployment across the industry and the business. And I'm going to tell you right now, I believe in the next 10 years, the most valuable board director on your board will be the one that can navigate the second shoe dropping of the digital economy. And the second shoe dropping is the digitalization of value across your business. So I'll leave it at that. Thank you. So, you know, I hope everyone appreciates that we only had time to really scratch the surface here. I mean, we could have spent 3 hours on this. So feel free to reach out to panelists, and if you want to continue the discussion, we're all happy to do that. But thank you again for taking your lunch hour with us and spending the time with us. I want to thank everybody for coming today, and thanks to the panel.